But all right, guys, let's jump in here. All right, we're going to review the price action of last week. Again, I did not trade it all last week. From the second here all the way to the 6th, basically the entirety of last week, we maintained 62.11. All right, so I would have said last week anything below, we would have been looking for a failure of 62.11 to bring us back to the downside. We had multiple back tests off of 62.11. All right, that never failed. All right, which ultimately was a bullish sign into the upside, which is what we got. And we're actually here now, all right, building on a new zone. So from the 6th, we squeezed, and now we're looking to maintain 64.55 here. Again, which was a previous high, which is not actually no previous low. Sorry, over here. All right, so for the time being, we have broken into a previous zone on oil. Again, I'm not surprised by this. We were at a macro key, a yearly low on oil. So the likelihood that we were going to fail there was the probability. There obviously is a probability for anything.
We had a lot of volume here. Right, so we had a 33.75 is where we kind of started to get a lot of volume up to 33.84/87. Right, so that'd be the first area that we would probably start to get some resistance if we do break through. All right, so how many ticks is that? All right, so it's about 78 ticks. So again, cut out 75% there, and then see if we can let the rest run. All right, that's if we get a breakout, trail it. Don't be surprised too, even if we pop the new high where it breaks the previous high can be pretty significant. And this is why people get trapped a lot in failed breakdowns, because sometimes it's pretty significant to the low. Like the low is pretty significant, and we just have to wait. All right, and so here we created a very big macro high on oil. That ended up failing, not only recapturing the previous high, but also the previous low. Right, and for basically the rest of the day sold off. All right, so we had, a pretty good up and down on oil. About 157 ticks. All right, so came down to a key low 44.55 and did the same exact thing. And now we're back up here again. We're actually clearing 66.18 here. We actually made an attempt to 66.51. Now, why is it doing this? We had a failed breakdown pattern. All right, right here, where we pushed up, made a new low, pushed up, broke that low, but then recovered it. This is giving us a squeeze. It gave us a squeeze from the overnight session. Now we got CPI. CPI actually didn't affect oil that much. All right, but we're back up here. We're in the middle of a squeeze right now. All right, so we're going to change this to green. I don't know. I don't like where we're at right now. I think that there's kind of there's not many trades to be had up here on oil, personally. I don't know if I probably wouldn't bet on the 65.63 failure again, unless it was very clear and we got some clear volume. Speaking, obviously gold's still inside of this this long-term channel, right, with the high being up here at 34.24 and the low being down here in this zone of 32.80 to 32.75. All right, yesterday on gold, I said, we're building up. You can see we're kind of starting to build a trend here. We're at the midpoint of this channel that we've rejected off of multiple times. All right, new low, higher low, higher low, higher low, higher low. All right, so for me, again, thinking in terms of, well, what would it take for gold to have a breakdown today? I would think that it would need to either fail 33.32 or better yet 32.21, but 33.09 just because we haven't had a back-tested low. 32.21 is probably the closest thing to a back-tested low that we have. So 32.21 to 32.09 would be required for an actual sell-off here. Otherwise, things are very bullish. All right, so if we look at yesterday's session, and again, 33.47 has kind of been the magnet price zone here. We got 34.65. Oh, I hit the wrong thing. Okay, no, that was wrong. I'm gonna do this. 34.35. All right, so on gold today, these are the zones that, or these are the majors and minors that we have here. And again, these are purely, these are just based upon what we have right now. All right. So, in my opinion, I believe that the major load is down here at 34.24. That's what we need to hold as support in order to keep us up in this zone, because it was the previous high, and it's given us the